I always say that I get this feeling of a little bit of nostalgia every time I come on this floor of Bombay Stock Exchange. It's a historic floor. Booms and busts have been made here. This one building which actually has seen or has really witnessed market history. It is, after all, the oldest stock exchange in Asia. The Bombay Stock Exchange doesn't get bigger than this. In terms of representation for Indian financial markets, it's always this special feeling. It's your first time here, I've been told.
Absolutely, and it's actually a really emotional feeling.
Yeah.
Because it's the biggest exchange, but coming onto the floor itself is like.
And can you imagine that transactions were actually happening here, where we are sitting right now? I've been told that the odd lots were actually transacted here.
Is that it? Yeah. Okay. I saw the R there, and I said Reliance must have been there.
In those times, it's actually somewhere in the corner. That's what Mr. Chan was telling me. Yeah. For the insurance industry, things are really picking up. And when I say things are picking up in terms of the M&A activity. A large deal was announced last week. What does that indicate? Consolidation is around the corner?
Yeah. See, if you look at it from 2001 or 2002, when the market opened up, we saw that a number of companies were not achieving certain volumes. And we felt that in 10 years' time, there would be some consolidation. It didn't happen. But at last now, the first one being announced, I think automatically we expect that there will be a lot more others thinking about what to do in the industry. So I think it'll be good for the industry. There should be some of the people who want to exit should exit, and the rest who wants to stay in the industry should be able to grow. For us, obviously, Reliance, we would like to be in the industry. We want to be a big player, and obviously we look at opportunities if they come along. So.
But do you think in order to really remain a big player in the insurance industry, you need to go through the inorganic route?
Not necessarily, but obviously inorganic helps you to achieve that faster, because if you want to grow quickly, organic growth will give you that 10%, 15% growth every year, but inorganic will automatically give you the scale. And in certain cases, for instance, companies like ours where we don't have a bank as a partner, and obviously with the new corporate agency guidelines, we are bringing in some banks, and in the next few months we'll be announcing some of those. But if there's another party which has a significant bank partner, it's always good to try and merge the two, because we are very strong on agency, someone else is very strong on banker. Merge the two, you get the benefits of both.
So would you be looking at acquiring an asset in the general life insurance or the life insurance?
See, on both the businesses, we are open to acquisition, but obviously on the general insurance side, we are strong on motor, we are strong on health, commercial lines we're trying to build up. A bank would normally bring in a lot of fire type, small retail fire business, which is the commercial lines business, which is highly profitable. So again, on the general insurance, we have tied up with IndusInd Bank, we've tied up Bank of India, so we have two big tie-ups. We'll obviously try and bring some more in. On the life side, we are in the process of trying to tie up. We've tied up with some small banks, very small ones, and let's see, in the next 3 to 6 months, you'll find that by 30th September, we'll have certain tie-ups. But again, as I said, we are a 80%, 85% agency company. Even if you bring in banks, there'll be small banks, we'll bring in only 5 to 10% of the business.
But you need to acquire an asset to broaden your customer base.
Or it actually helps you in the distribution side.
Okay.
Ultimately, you want more distribution. Distribution brings customers.
Okay.
So you may get a set of customers, but if you have good distribution, it'll obviously build more customers to you.
You've been open to selling stake in the past. You've sold stake in
Correct.
In your insurance business. You've sold stake in your AMC business. So are you open to more stake sales in other businesses?
Yes. See, if you look at it the way I think other companies started off, they started off as joint ventures. Yeah. From day one. Whilst we started our companies, each of our companies with only Reliance started them. So now the opportunity is there to bring in some, create more value for obviously for our shareholders, but also bring in a partner who can help us go to the next level. So with obviously with Nippon Life coming in both on the life insurance and asset management at 249%, that will obviously not only creates value for Reliance Capital, but also brings in expertise which we didn't have, like in the asset management side. Now we've got access to the Japanese market, we've got access to international markets, as well as take the best practices of Nippon Life. In the life side also, we've taken a number of best practices of Nippon Life. Same on the general insurance side, if you look at the huge opportunities there for us on the general insurance front. We own 100% of the company. We are in the top 5, 6 players. Obviously, we feel that the right opportunity comes, we would like to bring in a partner that will also help Reliance Capital, but also help the business itself. More important, the business will grow.
So I'm just trying to understand your basic approach here. One side you're open to acquisition, second side you're open to stake sale.
Correct.
So eventually, where are you trying to go?
No, see, I think ultimately you have to be in the top 3.
Okay.
Now, whether that you do that through you bring in a partner, a partner brings in certain skills to the business,
which brings capital on the table
and capital also on the table. And second thing is that should we because in the long term, if you're in the top 3 to top 5 players in the market, you're not meaningful. So obviously our aim should be how do we get there and how quickly do we get there. So one could be by via acquisitions, or one could be by organic growth. So that we have to look at, and if there's a good opportunity coming along, certainly Reliance would always be open to that.
You've been selling some of your non-core investments.
That's correct.
And do you think, are you looking at selling some of your other non-core investments, Yatra, Paytm? Are you looking at monetizing some of your non-core assets?
So as chairman has mentioned even in the last AGM, the aim is that Reliance Capital should be a financial services holding company with only financial services assets. So in the past, obviously, we were more like a PE fund which had accumulated large number of non-financial services investments, which obviously have yielded results for us in the past. And these ones, obviously, the ones which you can continue to hold, we will slowly exit over the next 12 to 18 months. And we have been doing that. If you look at last 12 months also, we managed to exit the Reliance RMW, Reliance Media Works, our theatre business, and our media services business. And going forward, obviously, we'll be looking at the other exits from the entertainment business, but also from the private equity type fund which you're holding, so all the various Paytms, Yatras of the world.
So by end of FY17, by end of FY18, you would have exited all your non-core businesses.
Correct. Our aim is by FY18 we should be trying to.
So what is the value of your existing non-core business?
See, somewhere around 3,000 to 4,000 crores worth of value is there, obviously.
Which is a sizable
in our
chunk.
books. Yeah, correct. And that also obviously is also in our books. And so gradually, if we exit that, our intention is that we plow that money back into our NBFC business, which is our housing finance and our commercial finance business. Both of them, we need to grow them to a substantial scale, and the opportunity is there. And also, if the banking guidelines come through and favorably for people like Reliance Capital, then certainly we'll obviously also like to apply for a banking license.
So eventually Reliance Capital wants to become a bank?
No, I think Reliance Capital will remain as a holding company. Obviously, we'd like to have a bank. We'd like to have asset management business, a life insurance business. So wherever we hold 51% plus, and obviously the bank would complement it. Because bank business will obviously give us the customer base, the distribution base, which we lack at this point.
But if you eventually, have a banking business as part of your subsidiaries, which means that you would have more regulations. You would then be regulated by Reserve Bank of India. At least that subsidiary will be regulated by Reserve Bank of India. Is it worth it?
If you look at Reliance Capital, is regulated by RBI.
Of course,
because we are an
NBFC,
and we are, as we've also mentioned, we are going to become a core investment company, CIC. CIC is also regulated by RBI. And one stream down, also, if you look at it today, we have our NBFC business, Reliance Commercial Finance, which we are moving down from Reliance Capital. So that is RBI regulated. We have our housing finance business, NHB regulated, and then we have our insurance business. So all our business actually regulated.
Banking has a different guidelines. I'm saying very stringent guidelines,
and
both in terms of borrowing, in terms of CASA.
That's
so I'm saying that I understand that being a bank, you will have a more universal portfolio.
Correct.
You will be able to borrow cheap. You will have access to retail deposits. Your cost of borrowing will come down dramatically. But apart from that, you also would be exposed to interest rate cycle and all the ups and downs of the economy.
Correct. But I think, see, to be able to achieve scale, as an NBFC, you have only certain limited amount of scale because you're borrowing from either banks or from institutions. So for a bank, obviously the fact that you can access retail deposits gives you unlimited scale, and that gives you the size which you can get to. And ultimately that also helps your other businesses like our insurance businesses, asset management business. They all benefit out of a bank platform.
If I look at the growth rate, and the way we look at growth is that we always look at the new premium. The premium growth for your general insurance business has been below industry average.
Correct.
Is that a one-quarter phenomenon?
No, it's last 12 months it has happened, and we have deliberately tried to do that because we had a large motor portfolio, but in the motor portfolio also we had large third-party portfolio. So what our intention was that how do we reduce our third-party business? So if you look at in the industry last year, most of the companies grew their third-party motor business. We degrew our third-party motor business. Our own damage business grew on the motor side, and commercial lines and health business grew. So our intention was that how do we correct that? Now that it's corrected, you'll find that now the growth rate will again come back in force. Yeah.
So when do you think you will go back and align your growth with the industry average?
So from this year, if you look at first quarter, you may not see it, but certainly some second quarter onwards now, because our book is more or less aligned, and with the rate hikes in the third-party business also, it's become more profitable or break even. So it's worth pursuing that business.
Sam, we always tend to talk about this quarter, this year, next year, what will happen this month, what is the growth collection for this month, and what are the projections for the coming quarter. Let's talk about 2020. We are sitting in 2016, let's talk about 2020. What could be the shape of Reliance Capital in 2020?
See, ideally, Reliance Capital should be a core investment company which should hold businesses both in our banking side, insurance side, asset management side, and obviously we have our ARC business also. So pure financial services holding company with large business. And when we look at it, we have to think that should we be in the top 5, top 3 in all our businesses. So that should be the key focus. And can we get to that level? So then you're a large financial holding company with significant presence across from banking side to the insurance industry plus asset management.
What is your view on the disruption in the financial space? I mean, we never thought 3 years ago that online platforms would be reality, and mutual funds would be sold by our robo advisors. The dynamics are changing, the landscape is changing, the distribution model itself is changing. Today we value the distribution network. Maybe in a digital phase we don't need to value the digital network, the distribution network that much. So what are your thoughts there?
No, I think yeah, absolutely, you've hit the nail on the head. And because this year also we've deliberated that next 3 years we'll find that nearly 50% of our business, retail business, will come through the online route, and we have to change our way of working. So therefore robo advisory becomes critical, but also our online systems have to be so easy and friendly, so the customers come to us online. And if you notice today, even across our businesses, in our asset management business today, nearly 10 to 15% of our business coming online, and customers coming directly to us. It's not the repeat customer, new customers also come. On the general insurance side, because motor is easy to sell, we sell nearly 25 to 30,000 cars online. Customers come to us online, they're buying online. So you can see the pattern has changed significantly, and we were internally thinking that ultimately will we have such large agency forces across all our businesses, because today it's third-party distribution driven. And also we have to think that who should we be tying up with for the future, because in the future there will be different people who are aggregators of business on the online space. We should be tying up with those people, because ultimately for retail business, I think, and especially the retail easy to sell business, will all come through the online space. And we as a company have to gear up, and we are trying to gear up.
Okay.
So we have obviously tie-ups. We have started tie-ups with multiple
That's where the puck is
aggregators.
moving, is what we're trying to indicate. Okay, so I'm just going to get some closing comments from you. Your 3 big businesses, life insurance, AMC and general insurance. What is your understanding of the growth rate for industry for next 3 years, and what is your understanding of where do you stand?
No, so if you look at our life insurance business, last few years we've shown slow growth. That was deliberate because we're trying to refocus our business. Now you'll find that there'll be significant growth, and obviously agency is going to be the main contributor. So we are driving that. We have tried to change our agency thinking, so more productivity, focus on customer service, because we don't want mis-selling. And so I think you'll find that there will be gradual growth, but more importantly, persistence will be better.
Okay.
So embedded value will grow. So ultimately for us, obviously across all our businesses, we have to aim to be top 3. How do we get there? One is obviously for insurance business, we need bank partners. We are working on that. By 30th September, hopefully we'll have some partners, both life and general. Even on the general insurance side, again, growth has to happen, but commercial lines, health, because health is going to be a huge growth area. Motor will obviously continue to be a significant portion also. And then asset management business, again, we have been doing very well. We also have to continue showing growth in the retail segment. And again, if you look at below the top 15 cities, we have become the strongest. We want to continue to be the strongest, because ultimately growth will come from the bottom of the pyramid, and we have to be there. So across all our businesses, key focus is how do we grow profitably, and how do you get into the top 3 or top 5 players.
So you prompted me to ask you one final question. If the aspirations are to become one of the top players in the life insurance industry and number 2 or number 3, for that you will really have to take a giant leap forward. It just cannot be a growth rate which will be in line with industry average. You'll have to really reboot yourself and take a frog leap for you to go higher.
Correct.
So what is on your radar?
No, so
it cannot happen automatically.
It won't happen. So obviously we have to look at organic growth. Organic growth has to be above industry levels. We have to also look at inorganic growth, and we have to look at big tie-ups with obviously the big banks, because ultimately that's the game.
So the headline you're giving me is that you have aspirations to become the top amongst the top 3 players. Top 5 or top 3?
Top 5.
Top 5.
Initial target.
Okay.
Then we have to get to top 3.
But to go to top 5 also,
you have to have
a plan in place.
Correct.
And that plan could be both inorganic and organic.
Correct.
What about AMC? You're almost there.
In AMC, we're number 3. Yeah. So in the market, so we are there. Obviously,
can you be the number 1 in next 3 years?
Aim is obviously whenever we are top 3, then we give them the target that how do we get to number 1 position, and they are working on that. That how do they build more distribution, and how do you obviously fund performance? How does it improve?
So what is the internal growth target given to your various managers?
See, we give growth target very simple. 15 to 20% growth has to be there, or whatever the industry is growing at, can we grow at about 3 to 5% more than industry? Plus, but more important is ROE has to improve every year.
So grow, but grow profitably.
Grow profitably.
But this year you're confident that you will be able to come back to industry average.
Correct. That's right. This year, certainly all our business show.
That's a promise and a commitment. Both.
Commitment, absolutely.
Okay.
Absolutely.
Really appreciate your time. Glad you could join us, and thank you for joining for us for the BSE Day.
Thank you very much, and really, I've really enjoyed being here.
Thank you very much. With that, it's back to the studio.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.